Welcome to the Payments Trilogue, where three seasoned professionals discuss payments and more for Europe and beyond.
Hello, my name is Michael Salmony, and Ralph and Javier and I would like to welcome you to another episode of the Payments Trilogue, where this time we're going to look at, quite honestly, one of my hobby horses, ones there that I've been trying to push for years, but not nearly as eloquently as the lady who's very kindly come to join us. The topic is B2B, which I think is a topic that is often ignored by conferences, by papers, by regulations, even by your organizations, Ralph and Javier, if I may say so. So we really want to hear more about B2B. So Erin, please tell us a little bit about yourself and what B2B actually is.
Oh, it's great to be here. And like Michael, this is one of my favorite topics as well. I'm Erin McCune. I am a longtime payments consultant. And to be perfectly honest, I've been on a bit of a crusade trying to draw the industry's attention to the relatively unsexy, unheralded exchange of value and, importantly, data between business counterparties. And sometimes it's B2B trade, cross-border, sometimes it's domestic flows, sometimes it's transactions originated by businesses, but to consumers, a lot of disbursements and payroll activity. And then, of course, a lot of intercompany flows and settlement and funding transactions between the various participants in the payments value chain. So adds up to an enormous amount of money. But continues to be less modern. Let's sort of start there. But industry forces are converging, and this world is about to change dramatically, and it's very, very exciting.
Wonderful. So you're making these very unsexy topics sexy. I like that. Yeah.
Well, someone's got to try. I mean, people get excited. I mean, it's probably 8-9 times the value of retail payments.
Well, this is the thing that kills me. 80% of payments and the value is in B2B. But we always only talk about consumer.
Could I just ask you something, or throw in some figures, because I asked AI on the size of the market just before, and I got two answers. One was global, 1.4 trillion, and the other one was 140 trillion. And so then I asked back, okay, well, how come I'm getting two different figures? And so the 1.4 was the service revenues, basically, and the 140 trillion was the overall volume of money moved in the business-to-business space. So those are the figures I was told. Are they right, or do you have a different view?
Okay, so let's sort of step back. And I'm going to be really explicit with numbers because these are big numbers. So somewhere between 1,250 and 1,500 trillion is global wholesale money flows. And so that's sort of the anchor point. And that is some combination of capital markets, intercompany flows, funding and settlement flows that support all of the activity between industry actors, core B2B spending, which is business buyers and their suppliers. So that all of that adds up to the big number. If you look at core B2B flows globally, so I'm Coca-Cola buying sugar, so direct spend. I am my company making travel arrangements, or just, someone using a marketing company or whatever. Lots and lots of different purchases that occur. If you add all of that up, it's depending on sort of the definitions get a little squishy. like what gets included, but that's somewhere between 125 and 150 trillion. And of that, depending on the corridors and the type of expenditure and the size of the business and that business's industry, some proportion of that is cross-border. Somewhere between 15 to maybe 30%. However, much to the disappointment of many an investor and wide-eyed entrepreneur, a lot of that cross-border is not cross-currency,
Okay.
which affects the revenue. And I think the other really important thing to consider here is that even though the wholesale flows are ginormous, these are monstrous numbers that are hard to get your head around, the revenue associated with them is not as rich as consumer payment revenue, which is part of why people don't pay as much attention to B2B flows. And there's just not as much ad valorem or basis points based business model pricing in B2B. And a lot of this is commoditized bank transfers. Like the vast majority of it is commoditized bank transfers. And where it is cross-border, if it's business flows, most, not all, but most businesses are pretty sophisticated about their cross-border and are moving enough money that they have a lot of negotiating leverage with their partners.
But
and if they're really big, they've got a treasury debt.
You're being quite positive about the corporates being quite sophisticated in that. I mean, it wasn't so long ago that half of the US B2B payments were via checks.
Oh, we're down to about 26% if you look at the most recent set of statistics. And I early in my career I was involved in commercializing image check processing. So I'm partly to blame for the fact that they've persisted, and I've been trying to make up for it ever since.
Because that makes things even worse, right? If you send images, that's instead of replacing it with a proper process.
Yeah, but yes and no. So I think the thing that people don't appreciate is that checks are, when we automated the back office and sort of built those workflows, checks were the dominant form of exchange of value, right? And so the original tools that we were built, sort of the workflows in SAP and the early AP workflows, were all built around check processing. And so you don't have to do anything exotic or different in order to process a check. And it is ridiculous that we rely on them in the United States to the extent that we do, but they are easier and better. You don't need to enroll a supplier. Everything you need to know to send them a check is on the invoice that they sent you. You put it in the mail, and yes, you have postage costs, but in terms of the information flow, it all gets taken care of for you. And if you're a large business that receives checks, or even a modest-sized business that receives checks, your friendly wholesale bank will digitize all of that to you and send it to you in an EDI formatted file that your ERP knows what to do with. So sadly, they persist because they actually work pretty well. I had the CFO of a very, very large company, Fortune 20. And I'm pitching him on automating and digitizing your processes and da-da-da-da-da. And I was a young whippersnapper at the time. And this guy just looked at me and he said, Erin, I have outsourced all of my financial processes. And I got teams all around the world managing this stuff. And I can cut a check for a penny. I was like, oh, okay. But, that's a Six Sigma operation. That's not your typical business, Michael, to your point. And
you'll be saying that sending paper invoices in envelopes and then
no, that I think is ridiculous. That I think is ridiculous. And we just had a big ISO 20022 milestone, of course, over the weekend with Swift, and I wrote a bit of a screed yesterday about it. The data-rich spec is wonderful. Like, there's no question. It's exactly what we need. It's only as good as the information you put in it. We got some work to do. All right, I don't want to defend checks. Can we talk about better things?
I mean, on the revenues, you say that even though the volumes are actually much bigger, the actual income through B2B payments business may be lower. But isn't it true that corporates are willing to pay for payments, unlike consumers? And because of these large volumes, it's actually a rather attractive thing, and lots of frictions where people can solve things. So it still is a very attractive part of the business, isn't it?
Oh, no. And there's so much value that you can bring to both the buyer and the supplier. What's interesting is that the value is much less about moving the money and much more about contextualizing it and the information that surrounds a transaction, and automating the workflows and engendering trust when we have new counterparties. And, we were just, before we started recording, we were talking about Glyph and, what do I do to safeguard and understand for sure who it is that I'm doing business with, and the stakeholders or owners or beneficial owners of that organization, and feeling confident that I'm not inadvertently participating in nefarious behavior or getting duped, because there's such extensive business email compromise, identity hijacking, things like that, and fake invoices. So there's a lot of risk mitigation. In addition to data and workflow automation, the data will also drive a lot of risk mitigation. And then, of course, most banks, they get some nice fee revenue from payments, and that's all well and good, but their business is lending money. And the transactions provide an enormous amount of information that allows you to do underwriting.
Exactly.
And I think as we sort of step back and think about the broad B2B and wholesale flows, look, moving the money is fine, but providing working capital in a manner that is responsive to the circumstances of an individual transaction, a counterparty pair, a supplier's needs at a moment in time, a buyer's needs at a moment in time. That's where the real money is, and the real value.
Erin, you will have to correct me. The rule of thumb I follow is that in terms of income, the income in payments is split half and half in between retail and businesses, more or less. It depends on the jurisdiction, but it is more or less 50%. So, but I wouldn't agree with Michael saying that corporates are willing to pay for even for value added. They are as willing as anybody else. So certainly not willing a lot. But what I see is that there is a bias towards corporates because authorities and regulators blindly think that if they can disguise income to corporates, the public, the citizens will not feel them, will not have to finally pay. It's the citizen who pays everything. But if it's disguised in a corporate payment, or the merchant paying, the merchant will include that cost in the price, of course.
Of course.
It's more a political bias introduced in how income is generated in the payments industry. But my question or my mistake is, because I very much agree with you that people tend to mistake retail and business, and we may be focusing too much in retail because it's what politically can have a loudspeaker. But when coming to business, what I see is that it is the big guys, the ones that dictate. And if there is a bias or a something in the businesses, it is that the big guys, they have the means to negotiate with the providers, and they can push costs to the smaller actors. And those are the ones who really pay the bill. The ones that cannot negotiate, that cannot, they don't have even a voice, they cannot produce, but they are the ones that probably, all in all, have more transactions, move more value, but they are the ones that have less voice in the payments industry in that regard. And I was just curious about your view on this. Is that right? It is that
Yes.
businesses,
Yes.
the big guys,
Yes.
having a big time, and the rest just supporting the others?
I mean, that's true in both retail and B2B. If you're a large enterprise in your retail transactions, I mean, there's a lot of hue and cry about merchants and all of this, but the largest merchants, they're negotiating directly with the networks. They're off the interchange tables. Similarly, if you're negotiating and for anything with a payment provider, volume means you have much cheaper pricing, and everyone else, those smaller businesses, pay the freight. That is also plays out in the dynamics in B2B between buyers and suppliers. So where we do have penetration of cards in B2B, and granted, what happens in Europe is different than what happens in the United States. We are far more card-centric, although the notion and the phenomena of using cards for B2B and shifting from cards in a T&E expense management context where it's very consumer-like and makes a ton of sense, and where there is more risk mitigation. And the enthusiasm for paying for invoice transactions with a card, that is a global phenomena, but it's disproportionate in the United States. When we see that happening, it really is limited to those circumstances where the buyer has outsized power over the supplier. And where we've seen the suppliers sort of up in arms about it, and particularly larger suppliers, just like, look, this is enough. Like, card issuance has moved down market. It's not just my biggest customers. It's all my customers, or many more of my customers want to pay in this manner. The AP providers are very aggressive to push it. And so as it becomes sort of a groundswell, the suppliers will sort of put up their arms. We have instances where there is then bespoke negotiation, and we get the buyer will accept a smaller rebate and the supplier will pay less for those transactions. They may get better data associated with those transactions. Ideally, they may get paid sooner. That would be good too. And then we also are seeing the rise, and this is more a US phenomena than a European phenomena, but this notion of premium ACH or ACH plus, which is basically an artificial synthetic construct on top of plain vanilla bank transfers, where the pricing has been negotiated and it is less than card, but considerably more than a vanilla bank transfer. And you'll see situations where the data delivery is artificially made worse for the plain vanilla in order to incent the supplier to accept a transaction that's, 100, 150 basis points as opposed to 250, 300, 350.
Just to understand what's
B2B economics, but yes, the power dynamic absolutely exists. And
but just to understand that, Erin,
fundamental.
what Javier was asking, because I think He rightly corrected that the large enterprises, of course, don't pay much, right? Because they have special negotiation. But 80% of a market is typically SMEs, right? And those are the ones that pay.
Yes.
So not only is there a lack of focus on B2B, even within B2B, there's a lack of focus on the SMEs, right?
Exactly. That was my point.
And there's a profound lack of focus on the supplier side. Basically, suppliers, I mean, I don't know, to be indelicate, they're screwed.
Yeah.
Right? Like it is incredibly painful. And the irony is that as suppliers pay the most, all businesses pay to make payments and get paid. They have to pay both sides. That's sort of the way it works. But the suppliers get the short end of the stick on the value proposition, but they have more expense associated with these transactions. And that's part of my crusade is, look, let's balance this out. Let's do a better job of offering true value to a supplier.
So, why don't the fintechs develop solutions for these suppliers, for these SMEs?
So they
have with consumer payments at the point of sale.
Yeah.
Why not do something for this huge market?
Yeah, so they're working on it, and you do see. I spoke at a conference a couple of weeks ago in London, and I was, there with a very, very merchant acquiring centric audience to say, all right, can we talk about your customers as you move into more and more invoiced recurring transactions? Many of your merchants are also selling to businesses. So let's talk about what that looks like and how you can foster better connectivity from the acquiring side into the procurement AP departments. Some subset of those transactions, the buyer, even if it's a business buyer, will purchase in a consumer modality. They'll just click on a pay now link and pay it. That's maybe 15%. The 85% of it is going to be paid in a traditional procurement, AP-driven B2B modality where a function or a person, if it's a small business, their job is to pay all the invoices, and they're going to review them and see if it's okay and schedule their payments. And that is not going to get paid in a consumer-like traditional acquiring mode. It's the buyer who's going to originate the transaction. And so making that clear and then helping that audience understand that in many cases, the buyer side of the AP, of the B2B value chain, is more than willing to entertain a discount to accelerate funds availability to a supplier. They want to pay with a card. They want help to drive acceptance of card where businesses are willing to do that. This whole sort of premium construct around ACH and the need to deliver the information to the supplier in a manner that the supplier it's machine readable and postable. That there's an enormous opportunity for the supplier side and the acquiring side to work collaboratively with the buyer vendors in order to bridge the information and allow more agency on behalf of the supplier to say, actually, I will take a discount for this because I do need the cash flow, or I would prefer this information in a manner that is machine readable so I don't have to log into your supplier portal or the portal that the buyer's side introduces. So there's a lot of more attention to suppliers in the last few years than I've seen in a long time, and it's very encouraging. We still have a long ways to go, but I see much less. I think we're getting to the point where we're moving toward genuine interoperability between the buyer and the supplier side, and a recognition that these sort of walled gardens of B2B networks aren't going to work. We're going to have many B2B networks, and they have to connect to one another. We're getting there. So it is generally better. Interestingly, and Michael knows this, I had a stablecoin rethink summer. I sort of felt that I needed to check my knee-jerk reaction to sort of the whole crypto world, and really consider in a sort of disciplined, fulsome manner how not just stablecoins, but sort of programmable money writ large. So tokenized bank deposits, CBDCs, and the geographies where that's going to be important, all like three of them.
Well, if I could,
and this is where things get interesting.
You guessed my next question here, because I think, if you don't mind, let me just try to dig a bit deeper there into this digital transformation, which I think it is going a bit slower than on the retail side.
Yeah.
We actually had Tony McLaughlin here, who explained to us that stablecoins are actually travel checks in disguise.
Yeah.
So it sounds a bit like in the US you are replacing old checks with new checks. And what's your view on
that? Tony's got a good shtick. I know Tony, and I like Tony. Okay, let's step back. So in the context that the conversation we've just had, we've talked a lot about the value of the data. We've talked about sort of workflow driven payment automation writ large. And we've talked about working capital and sort of both sides of the equation, whether it's the buyer or the supplier, wanting at any given point an opportunity to avail themselves of working capital. But the way that we do that today tends to be cumbersome.
Mm-hmm.
So given all of those sort of observations, the realization I had during my stablecoin rethink, whatever, which was broader than stablecoins, to be perfectly candid, B2B, if there's any use case that really matters, where programmatic money movement will be profound, it's B2B. This is the best use case for programmatic money movement. And all of the logic that is going to determine those smart contracts, that is going to govern the release of funds, that's going to set the constraints or the preconditions for the funds movement, is absolutely dependent and predicated on information that is in the back office. And that is what has got me very excited, because because of the bank FOMO about stablecoins, because of the fundamental rethink that's going on in terms of interbank liquidity management and wholesale money movement, the early forays of enterprises experimenting with some of these tools themselves, and then finally the whole fintech ecosystem building their own bespoke infrastructure based on these new capabilities. We're going to be able, assuming that it is infused and that it's interoperable with one another, TradFi has to remain interoperable with the new stuff, because think about the many-to-many in B2B, right? The buyer and supplier are making independent
choices. That's what Ted is working on, right? Yeah.
Yeah, and they're all making independent choices about their banks, their software providers, and all of that stuff has to interconnect. And I look at this world and I think, that programmatic logic is incredibly valuable if we can solve the interoperability, which would then allow a representative of the supplier to provide to the supplier the level of agency at the transaction level to determine the attributes of a transaction and to use the information in a manner, assuming there's probably going to have to be decoupling of the tokens that represent the value and the tokens that represent the information, particularly as we're trying to move cross-chain. And there's some early forays of how that might work and what that might look like. But I think this is a profound opportunity. And yes, it's going to take a long time. But, between the programmatic money renaissance, I guess, for lack to be ridiculous, and then agentic and AI and the large language model's ability to deal with all the unstructured data, because let's be honest, all the data in this world is the unstructured data is the problem in B2B. That is our problem. If it was structured, we'd be in great shape. We would have automated all of this forever ago, but we haven't because it is unstructured. So, I can't retire, but it's going to take the rest of certainly the rest of my career, but possibly the rest of my life.
Erin, I have a question connected to your last comments, which is based on another impression I have that's the worst overlook on business payments comes from the regulators, because they are too focused on individuals. They identify them as voters, and they want to do rules to please or to appease individuals. But they are missing the needs of the businesses. And I will give some examples. For instance, at least in Europe, when enacting instant payments regulation, they were just thinking of the individuals. And an occasional instant payment has nothing to do with the need of processing, tens of thousands of transactions instantly. And nobody thought of the real needs of that happening. Paying providers, paying payrolls or whatever. That was missed. VOP, verification of P, has nothing to do in between the retail and the business world. And regulation was designed thinking of the individual. But then who's thinking of the businesses? And coming to programming and cryptocurrencies and stablecoins, here as well, at least in Europe, when you talk about it, it's CBDC, retail CBDC. That's the only topic we discuss, and we are forgetting about the needs of business. So my question is, how can we better educate regulators not to forget businesses and their needs?
This is my life's work, Javier. I show up at these conferences. I pigeonhole them. I talk to them privately. I'm like, look, great. Okay, good job. Now we have all this real-time payments infrastructure. So you think it's going to be used for B2B. Okay, so how are we going to address these transactions? If I have the bank account credentials for my counterparty, I'm going to debit them, or I'm going to push them money. I can do that today. And why, when most of my transactions are scheduled, do I need real time? Now, I think there is some fallacy there. I think real time, I'm not interested in real time necessarily. It gives us some flexibility in terms of paying at the last minute. I get into these ridiculous conversations in the United States about, I like my check float. I'm like, why don't you pay your invoice at the last possible minute? You could do that. That's an aside. But I think that I agree with you. And I find it incredibly maddening, particularly when you consider the economic consequences of streamlining and driving efficiency in B2B, and the ability to provide profound working capital benefits to smaller businesses, which are the lifeblood of most economies. They are responsible for an enormous amount of employment and local revitalization. I'm on this crusade with you. Let's do it together. It's going to take some time.
A bit contrary at that point. There are some businesses I talk to who say, "Thank God the regulator is ignoring us. We can actually do the thing."
Well, there's that too. and I think once again we need to bifurcate our observations about large enterprises, and smaller businesses. I've had the pleasure of doing a lot of work related to sort of financial inclusion adjacent. When I was at Glenbrook, a lot of my colleagues did a lot of that work from a retail and a consumer perspective, but I would get pulled in when we were thinking about micro businesses and small businesses and formalizing sort of the smallest businesses in an economy. And I think that's all really important. And all of those big businesses do a lot of business with smaller businesses, and they can get their large counterparties to exchange EDI files with them. I mean, we did that back in the 70s and the 80s. Like, I did that in the early part of my career. But the long tail, that's where all the friction is. So there's actually mutual benefit if, as an industry, back to my haranguing the merchant acquirers, there's incredible benefit in bringing together the constituents in the industry that represent smaller businesses and the constituents that represent the larger ones, and knitting this together in order to exchange the information that allows the agency and the ability for the small business to avail themselves of working capital when they need it and not get abused as aggressively by their providers and their counterparties.
Okay, we're gradually coming towards the end of our time slot, but I would quite like to pose a question to Ralph and to Javier on what you said. Because, I mean, we've identified here very clearly that B2B is an enormous topic, and within B2B, the SMEs are an enormous topic. And I haven't really had a good answer why the banks and the fintechs are not addressing this. I mean, I am an SME, and the service I get from my bank is miserable. I have nothing about billing, about invoicing, about if I were to need capital. It is absolutely, Deutsche Bank, of course, does wonderful things for Daimler-Benz, right? That's not the problem. But for the SMEs, I get very poor service from banks and from fintechs. Am I wrong? Or do you, or how would you see that?
Well, if I should answer from my perspective, one of the biggest problems we have in open banking is the great resistance on the bank side to protect their corporate customers and their corporate business. So whilst we struggle a lot on the retail side, we struggle a lot more on the corporate side. So this is where banks are much more even more defensive, and where they are playing basically with the tools they have, with the APIs, which are the direct customer APIs being much better than what they offer to third-party providers. There is tools like Epics and questionable requirements around SCA not being there, and while we are loaded with SCA not once but twice, oftentimes. So I think it is really, really made very difficult by banks for anyone else to get into that space.
Well, in my view, I think the SMEs segment is a competitive one. I think there are many providers which are struggling, and they are really thinking on how to serve better those customers. Now, SMEs, I think they fundamentally have a problem, which is that they bring the nuisance of an individual without the income of a corporate. So they many times they bring the problem without bringing any benefit to a payment provider, maybe. But overall, I would say that more and more I see banks striving to better serve those customers, and that they are perceiving and that they are learning that they can become a very profitable segment in their wallet. But of course, the problem here as well is that when you talk about SMEs, there are myriads of SMEs, and each one is different. So, trying to get a common understanding of SMEs, I think it's hopeless. I think we should focus on more specific, more targeted segments. But I don't see that they are not well served. At least in Europe, I see that many banks are specializing in serving those kind of customers.
I mean, there are plenty of surveys where you ask the banks how well are they serving SMEs, and they all say we're serving them very well. But if you ask the SMEs how well are you being served by banks, you get a slightly different response, right?
Yeah, but probably SMEs. Yeah, probably SMEs have the same opinion on any service they get.
That's
which is very legitimate.
And there are plenty of options. An SME does not have to bank with a bank that's serving them badly. There's all kinds of offerings for them. I would observe that regardless of the size of the business and the sophistication of the bank, data files and integration capabilities, B2B should be embedded in the workflow of the business, whether the business is using an ERP or an accounting platform, whether they're using an industry vertical specific software platform that allows them to affect payments as well as handle their CRM and all the other things they need to do, or whether they're using an office of the CFO solution that is buyer-centric or supplier-centric. All of the transactional rich context is in those workflows. It is not something that the bank can do. The bank is going to move money and they're going to lend money. But none of us, large or small enterprise, wants a back office workflow solution from our bank. And let's be really clear about how that's going to work.
Yeah,
and
I'm not
that's why
expecting
the
an
agentic
solution.
and the programmatic stuff is so interesting.
Yeah. I mean, I'm not expecting an ERP solution from my bank, but I mean, if I look at Revolut, for example, I mean, they are just brilliant for their business customers. They do finance,
use them.
they do FX, they do billing, they do invoicing, they do cash management. And I'm not seeing that from my normal bank, right? So I think
you should be banking with Revolut.
Okay, I think it's time to wrap things up.
You're a small business.
Exactly. That's the point I'm trying to make. I have first-hand experience of this. Absolutely.
Yeah. If it makes you feel any better, my giant bank is terrible too.
Okay, Erin, it's been wonderful. You've been
even though I know who to call.
As always. Thank you so much.
This was really fun. Thank you.
It's been interesting to see the various differences. I mean, the US has made this amazing transition to only 50% B2B checks and now to 25% checks. But you also have still a lot of cards going on, which I think is, as you said, is very cool in Europe. But I think you made a lot of very good points that we can completely relate to. So thank you very much, Erin, for your time, and as always, being very capturing on this very prickly subject. So I think you've really made the unsexy sexy. Thank you so much.
Yeah, thank you very much. It was a huge pleasure, Erin.
Oh, the pleasure's all mine. I thank all three of you. Thanks for having me, and thanks for the robust, sophisticated conversation. I enjoyed it.
I hope you didn't mind that we challenged the odd thing. I think that's always.
Oh no, I want to be challenged. I'm tired of what I think.
Okay, I think it's time to sign off. So Ralph, Xavier, and particularly Erin, thank you so much for this lovely dialogue. And thanks to all for watching, and look forward to seeing you next time.
Many thanks for watching and listening. We hope you enjoyed this episode. Looking forward to seeing you again next time.